In this lesson, I wanted to revisit the first two lessons. Um, I got an, I got an objection from lesson one that I wasn't completely explaining the monetary system because people said, hey, you know, all the money isn't just debt to people. It gets deposited in banks, so it's a debt to the bank, and it becomes assets of the people because it's their deposits in the bank. And yes, once the money is injected into the system, then it starts adding up as people and businesses and banks all interact. The money circulates as a medium of exchange at that point, and then both sides of the balance sheet start adding up. But that doesn't change the fact that it was all injected into the system initially as a debt to the people. It's just like a Vegas casino. When you walk into the casino, you have to borrow chips. And then you get to sit at the poker tables and circulate your medium of exchange and try to collect more of the chips. But at the end of the day, when you walk out, you have to turn all your chips in. Exact same thing with the banking system. All the electronic digits out there are chips owned by the banking system that you have rented and you get to use while the game is on. But at the end of the game, which is basically in deflation when the capital holders start pulling their chips off the table and the banks have to call their chips in, that's when you see who controls all the chips. Even the stuff that you thought was an asset on your balance sheet, it's not. It's a conditional liability. It's all borrowed money. It all unwinds back to here. And it gets sucked back here and to here. So that's the way the monetary system works. And all the power is over here on this side of the world. But this issue of power is the key. The economics profession makes a big mistake in terms of microeconomics and how they built the theory of the firm. Is there's this underlying assumption that companies are in the business of profit maximization. It's not really true. That's a limited perspective on the income statement. Completely ignores the balance sheet and how companies go about engaging in warfare to gain market share, to conquer competitors and put their assets on their balance sheet, to move into new countries, to do those types of things that builds the firm. And that's what corporations are really doing. They use the assets on their balance sheet as sort of like military armies to engage in that type of battle. Now with the military, it's gaining geographic territory. When it comes to corporations, it's economic territory. But when it comes to banks, the imperial Wall Street type banks, it's financial territory. And then it's more like the military geographic territory as well, because all those money center banks are kind of feudal lords over a certain territory. They control all the money within a certain territory. They control the chips that the people and the businesses have to use. They're the casino house for that territory. So economists that just model the banking institution for sort of steady state profit, they get it wrong. That's not what these imperial banks are all about. They're all about gaining ground. We've seen this in the past with Chase Bank working with institutions like the IMF, moving in to conquer countries like Argentina. We saw it in 2008, where Chase basically conquered Seattle by incorporating WAMU onto their balance sheet. They conquered Bear Stearns, incorporated them onto the balance sheet, and so JP Morgan expanded its power, gained power through that process. To get real specific, JP Morgan has like 75 to 78 trillion in derivatives under its control. Notional purchasing power that hovers above the economy. Huge power base. And that's like 22 times the size of the US government's budget. So, who has the power here? This is a parent-child relationship. One of the big sources of control and power over a kid that parents have is the ability to control the money. They basically control the liquidity that flows through the children. Same exact thing here. The US government has to come to this capital machine every week or two with its hands out. Please feed me, please give me my allowance for the week. It's in the subordinate position. And that 78 trillion is not only 22 times the size of the budget, it's more than 5 times the size of the whole American economy. That's massive power. All controlled by just one of these 18 imperial banks. So add all 18 together. And then that's just the sell side banks. It's not including the buy side power over here, all the hedge funds and the foundations and stuff like that. That's all part of this global capital machine. That is immense power. It's the most powerful entity on earth. Now, it's not like it's a smoothly run entity where everybody cooperates together. It is ruthless competition here. Deadly competition. But there's a hierarchy in this machine. The bigger capital pools have hierarchical power over the others. And they all work together in terms of financially being aligned to maintain their power over controlling people's and government's money. Because the power and wealth that comes from that is immense. And it's not just the US. The people that will say I'm wrong in this because it's the country that has the power, it's the government that has the power, and the banks are just sort of servants of the government. It's the exact opposite. This is a global capital machine that has multiple governments under its control. We saw that with Greece, where this machine basically formally tried to take over Greece earlier this year. They tried to do it to Iceland. They've done it to other countries in the past. Ireland just last week was talking about negotiating with this machine in terms of how they're going to share the pain that the Irish people are going to be in now. And in the process of negotiating with different institutions over here, they were letting the most senior capital holders know, the top bondholders know, hey, we're not messing with you guys. You guys will get 100% of your money back. That's a government that we're trained to think governments run the world. That's a government going to a small group of people saying, hey, we submit. So it's a demonstration of who really has Machiavellian power in the world. Then after lesson 2, you're probably looking at this diagram saying, come on, man, tell us what to do about this. And I'll talk about this later in other videos, but just to get to some of that now. Some of you are probably looking at this diagram and saying, hey, it's just in the Fed. That's a big movement now, right? And we can solve the whole problem by just ending the Fed. I think the reason that's a big movement now, and it's in the mainstream media and being pushed even, is because a certain faction within this capital machine wants that to happen. They'd be happy with that. They've largely moved the capital to Asia. They've transferred the production machine to China. These banks have ramped up operations in Asia. The biggest banks in the world are now in China, and this machine is trying now to align itself with them. It's very clear the 21st century is going to be driven through Asia and the financial centers of Hong Kong and Singapore and Japan, and then China is going to be kind of the churn center. That's the long-term direction for this machine. It's going to take a long time to bring that to fruition, but we're going to see the 21st century, the decline of the West as this machine shifts east and the rise of the East. So, I think part of the machine would be happy with the American people basically cutting their own throat. Because if you just end this little box and don't deal with this and don't deal with this, then you're in a lot of trouble. Because it's just the funnel through which the government and the American people get funding from this machine. You cut off the funnel, you cut off the liquidity. The real power is over here, not here. The central bank is just the method to capture a government and take it private, submit it to this capital machine. So that governments are now capitalist entities just like corporations. It's a big myth that there's a difference in socialism, capitalism now, and the left versus right debate, and business versus government. It's all controlled by this machine now. Or at least that's the goal. Governments are managed as capitalist entities. Their financing is exponentially driven. So the government has to manage itself for exponential returns. You have to pay off the debt holders. It's one of the reasons warfare is a big deal. Because the government has to be able to provide collateral and service the debt that it gets from this capital machine. Okay, so I think we're a long way off from dealing with this level, because in order to deal with it, you got to understand this, and most people don't understand this. And then you got this level, where I kind of classify the anarchist and anti-statist and libertarian and Tea Party movement and Austrian economics, and where it's kind of just focused here, where it's got the idea in its head that it's just people suffering under the tyranny of government, and we need to kind of break the power of this down, and that will allow us all to be free and have more of a free market. Well, again, I don't think that shows a sophisticated understanding of the real power in the world. And I'm amazed at some of the super intelligent people that advocate those policies, that they somehow get muddied thinking as they think that the corporate empire system is free market, or somehow not statist or not imperial. The corporate imperial system has been built under this capital machine. It is a global system that has no national loyalty and has no accountability to people. All the accountability is up here, and the corporations are dependents of this system. They're basically sort of the servants of the system that are out there churning the bank liquidity and capturing value for this machine. So that's not free market in the least. And now that we've run this machine for decades, this Chicago school Ponzi-nomics, Harvard neoliberalism, where it's built this ruling oligarchy here in this machine, a massive dichotomy now in society. It's a predator-prey model that we have now. Wealth and power disparity is bigger than it's ever been in history. You have a ruling oligarchy now that's possibly the most powerful ruling oligarchy in history, at least in history for a long time. And so this, when you have a society like this, that's precisely the wrong time to unleash the free market on the people. I think even Ron Paul has suggested something like this, because he, I think, has an understanding of the power of this machine, and he has said that you can't just kind of go free market all of a sudden, that there has to be a transition period, which would basically be government becoming stronger to restructure all this and then return power back to the people, devolve power back down to smaller level entities like states and towns and communities and people. Like the Tea Party is talking about, we need to put the banks through bankruptcy because that'll like teach them a lesson. That shows a misunderstanding of the rule of law and contract law in the United States now. The Constitution's out and we have the Uniform Commercial Code, which enshrines these people. And a banking institution is kind of the merger between these groups. And so you put the bank in bankruptcy, all that's going to do is force what's left in the people over to the capital holders. The people will lose everything that they haven't already lost. So if you're associated with the Tea Party or libertarian movement, just talk about this issue and let's develop a more sophisticated understanding of bankruptcy and contract law and the way the capital machine works. An example of the danger of bankruptcy now is with Bank of America. After 2008, Countrywide and Merrill Lynch were both forced up under Bank of America. I would suggest that was a Machiavellian power move. It was a setup because they knew the people would be demanding bankruptcy. And now if you put Bank of America through bankruptcy and the capital holders hold a lot of control in those assets and the mess in Countrywide, you're basically going to lose all the unprotected assets sitting in Merrill Lynch to the capital holders. And Merrill Lynch is the biggest retail house in the US. So all their wealth that's sitting in unprotected assets that the capital holders could get their hands on, it'll be transferred up to the capital holders. So bankruptcy is a mistake without restructuring this and the legal system as a whole.